Welcome to the Winnie Podcast. This show is focused on empowering ranchers. Whether you're a seasoned rancher or just getting started, we'll guide you on how to use the infinite banking concept as an alternative way to finance your operations. It's a better way to think about money. Join us as we discuss planning for the future, attracting the next generation, and the art of keeping more money within the family. Here's your hosts, Winnie and Lacy.
Hey, welcome in. Yeah, welcome in. It's, we're up for another really great episode of empowerment and encouragement. Today, we are going to chat about kind of like a couple of things. Like I could say from a standpoint of use it or lose it kind of standpoint, or just sharing some ultimate stories to really encourage or empower you over there, if whether you're an existing client or someone who is just sitting on the fence about whether they should incorporate the infinite banking concept as a part of their financial lifestyle, or just 100% just questioning the whole thing because it has something to do with life insurance. Typically, what Lacy and I bump into is a lot of commentary around the whole life insurance conversation. And a lot of people do have very legitimate stories around why they don't trust insurance in general. But you just have to remember, insurance is so broad. It is so broad. And even within our industry, the life insurance industry, it is so broad in terms of all the different styles of contract, how it's offered. And so maybe for most of you over there, it becomes a little bit of an overwhelming experience to make a clear decision about it because there is just not enough information that you might have to go ahead and pull the trigger on deciding that, hey, this is something you ought to do because it's a good thing to do. Or maybe you're like, no way, man. All insurance people are just scammers and all that sort of stuff. So yeah, we're here to really share some real life stories and encouragement about why you ought to at least move forward with at least applying for it.
Yeah, maybe we can share that graphic of the insurance salesman that we have. That it's like a cartoon.
Okay.
And whenever he's on the stage and he has his little briefcase and the whole crowd is like running out of an auditorium because the insurance salesman started to speak. I think that's hilarious. And it is like insurance is just such a broad term. But what I want to encourage listeners, don't be part of the crowd that's running away before you even know what it is
that you're truly
referencing. Yes, unfortunately, insurance is grouped into this broad term. A funny story about whenever I met Reed, I worked for an insurance company, and he's like, I hate insurance. Insurance just screws everybody over. And so like that, and I still continued to date him after he said that to me. And then here we are 22 years later. So yeah, it is a broad term that I feel like is thrown around loosely, and we're here to advocate for it.
Well, it's interesting because life insurance is an option. It is a choice. It is something that you have to choose for yourself. It's not the same thing as automobile insurance. You can't drive if you don't have auto insurance.
Yeah, it's a requirement for sure to have the liability coverage. And you're right, like life insurance is not a requirement. I mean, yes, there are some, like when you get a bank loan, you're required to have some sort of coverage, life insurance coverage, so that your loan is covered. But even that, like, is a whole other conversation. Because I do feel like most people don't know what they're getting into when they sign on that dotted line to add the life insurance to their loan.
I never really quite thought about it this way. I think the reason why life insurance is not a requirement is because everyone has to qualify for it. You don't necessarily have to qualify for automobile insurance. You can just get it if you have a car. Like, it means just what you get. But you actually have to qualify. You have to meet You have to meet the standard in order to get it. So you can have all the money in the world and still not get life insurance on yourself. Or you might not have hardly any money, and you can qualify. But,
Yeah.
Well,
and that's a whole other can of worms too, because you see these advertisements on TV and on the radio. It's like, oh, life insurance for X amount of dollars. You're guaranteed to have coverage. But what's the catch? Like, there's always a catch. There's always a catch. And so I think we should go into, at some point on this episode.
That's precisely what I'm talking about, right? Like you just said what most people say. It's like there's a catch, meaning that causes distrust, which means why should I put money into it if there's a catch, right? So can you quantify that a little bit?
Yeah, so there's two different types, or I'd say two, I'm sure. But, if I'm going to go and I'm going to buy a burger at a fast food joint, or I'm going to go to my local restaurant who specializes in barbecue, what am I expecting? Where am I expecting to get the better quality? They're going to guarantee me at the barbecue place that my brisket's going to be done to a certain extent. The fast food joint,
quality.
Yeah, a standard and quality and all the things. The fast food joint, they're just pumping out numbers, right? If they can sell X amount of burgers in a day, that's what their goal is. It's not quality. And if you are interested in something about the fast food industry, go watch The Founder. It's actually very interesting. It's about McDonald's, but that's a whole other topic. But so let's just talk.
Squirrel.
It is. I know, right? It's so good. But when we're talking about life insurance, and we hear these ads all the time, like, oh, you're guaranteed this amount of coverage for this much. Why would you go pay more? But what is the difference in that type of coverage and the type of coverage that we offer? And we say this to our clients all the time. Just so you know that whenever you start this process with us, it is not an overnight process. There is an application process, and it's called a process for a reason, because the life company takes all of your information and they decide whether or not they're going to offer you coverage. And if they come back and say, yes, we're going to offer you coverage, Lacy, that means that I've already qualified for that coverage. Now, if you go and you call that 800 number on your TV that says you're guaranteed to have a policy for X amount of dollars per month or whatever, they're not qualifying you at the time that you put that coverage in. Yeah, at the time that you apply.
So
I just say the big difference?
Yeah, so there's what Lacy's speaking to is there's qualifying at the time of application, and then there's qualifying at the time of claim. So typically the ones that are on the TV offering is like 100% approval. Yes, they're going to approve you, but they're also going to make, like, at the time of your beneficiaries making claim, then that's when they'll qualify to see if you actually can get the death benefit. So it's kind of a gamble, right?
It is a complete gamble because we don't know when we're going to pass away and we don't know how we're going to pass away. And if that company decides that the manner in which you passed away does not fit their claims prep, they have the right to deny you.
And what else is up in the air and what we don't actually know is there's only certain windows and periods of time. I don't know any human, like if you happen to be the kind of human or you happen to be a part of a genetic pool that allows you to, never be in the middle of a medical investigation. You're always in good health. You're always this and you're always that. Well, that's great. But a great majority of people are not that. And there needs to be, like, being able to qualify is something that I think most people take for granted or don't realize the value of at least applying to know where you stand. You may not give two hoots about whether life insurance is important to you, but I promise you there's someone in your life that does. Whether it's your business partner, your spouse, your kids, your common law, there is someone in your life that could definitely benefit from you passing away. I know that sounds so morbid, but it's more than just death insurance.
Well, it can seem morbid, yes. But it's like in that time whenever your family is going through and suffering the loss, do we want to make that process a bit more bearable? And, it
Yes.
can be done through life insurance. Or do we want them like, how are we going to make ends meet now that the breadwinner has passed away? What are we going to do? I mean, for me, I speak for myself, complete peace in that financial realm. And I can speak to that personally whenever I was diagnosed with cancer, you don't know. Before you get all of the answers and all of the tests back and all the things, it does go through your mind, okay, well, what if I don't make it through this? But I knew one thing that I had complete peace about was that we had everything set up and that the family would be okay financially. But it was that peace of mind knowing that my life insurance policy had been in place for a number of years before I was diagnosed with cancer. But you know what? I just spoke to someone a couple of weeks ago who one day, they had some coverage. They didn't have coverage any longer and they received a diagnosis. And that's not a easy phone call to have with someone.
Yeah. Or, what typically happens is I was just actually speaking to a lady yesterday. She's in her late 50s, unfortunately going through a rough, difficult time in the middle of a divorce 2 years ago, but been with this gentleman for over 35 years. Okay. Now, this typically happens a lot in the middle of a heavy life transition, such as divorce. And it could be divorce, it could be death of someone. And in the midst of a lot of emotional chaos, we all go through moments, whether you're actually an active person that manages their cash flow or not. Life insurance just always happens to be one of those expenses that becomes dispensable in a person's mind. It was oh, well, this is an expense, this isn't a cost. And depending on when you might have gotten that insurance contract, and typically most people, I would say in Canada, probably over 50% of the population, if you are 50% of the population that has gotten life insurance, I bet you it's term insurance, which is the kind of insurance that starts off cheap and then gets really expensive, right? And when you notice that monthly payment goes up, right? If you hadn't been planning to actually turn that rental insurance, that term insurance into something that's permanent, when that cost comes up, and if depending on what elements are going on in your life at that time, you may not have the bandwidth to decide anything other than nope, it's too much money. I'm just going to cancel it. And you just cancel it without talking to an advisor. You just cancel it. And then, like Lacy says, you end up in a situation where all of a sudden, when you do find a need and a purpose for life insurance again, you've already canceled your only chance to get it because now you don't have an opportunity to convert that term insurance into a permanent insurance.
Yeah, so that's what I was just going to say. So a note here to our listeners, if you have term insurance, most term insurance will also be convertible, which means that you can take that and convert it to a permanent policy without going through the medical qualification process again. And so that is something that I would say most people who come to us have some sort of insurance in place, and a lot of times it's term. And we'll go through and we evaluate it to decide, what is this the kind of coverage you need? What can be done with it in order to make it permanent insurance? And does that fit your current situation at that time? But I think the biggest thing here is not taking for granted that we're always going to be able to qualify for a policy. Because if you see me right now, I am healthy. I look healthy. I feel great. But I am not insurable in the eyes of the insurance company right now.
Mm-hmm. So, and that's because you're still within 5 years of your cancer diagnosis, or still within 5 years of being able to be claimed cancer free, right?
That's right.
Mm-hmm. So yeah. I guess the good news though is if you remain cancer free for a certain number of years, you can reapply. So that's something to note. Mm-hmm.
Yeah, for sure. If I hadn't had my policy in place, for a number of years before I was diagnosed, I would be here with no insurance and not able to qualify for it. And that doesn't put my family in a very good situation if that were the case. So number one takeaway from what we've talked about so far is don't take insurability for granted. We're not all guaranteed to be able to have a policy, and act while you're healthy. Be proactive. Don't wait until you have a scare financially or medically to act on it.
Right. And a lot of that time, that scare could look like not even your own personal medical scare, but you know what triggers a lot of the time through a lot of the conversations that we have is when you actually attend a celebration of life, or someone you love just passed away, or someone like a good friend passed away from something, and you're able to have a bit of a front row in seeing the aftermath of that person passing away, and then realizing for yourself, well, do I have things set up correctly? A good moment to actually see and apply for coverage is when you're not in the middle of any medical investigation, right? I feel like I do my best to also take care of myself, but I'm about to enter into my 5th decade, and there's little piddly things that just happen to you that people at this age group kind of talk about. And when I was in my 30s, I'm thinking, yeah, right. But it's true. It does happen.
It's kind of like a passport application. Don't wait to get your passport till you have the trip booked. Then you're all in a panic and it's stressful.
Yeah, make it easy for yourself, for goodness sakes. Even for myself right now, I'm seeking a window in which I can reapply, but I have to wait until all these little things are medically cleared and finished being investigated, right? And those windows of time as you age get smaller and smaller. That's all I have to say. And then what about some other clients that we've had? Sorry, what were you going to say, Lacy? I interrupted.
Yeah, I was just going to say in terms of kids too. So some people will kind of say, well, why on earth would I put a policy on my kid or apply for a policy for my kid? Well, when we're speaking infinite banking, if you've read the book and you know a little bit about it, then you understand why we want a policy on our kids. It adds to our banking system. It helps create that generational wealth piece. But then, we had a team member who has a daughter who was diagnosed with epilepsy after her policy was in place. So, we don't know what's going to come up for our kids. Hopefully nothing. But if you already have a policy in place for them and something comes up medically, then they already have coverage. We structure a policy in a way that they're guaranteed to even have more coverage at a certain age later on down the road. But it's just being proactive because we don't know what life's going to throw us.
Mm-hmm. And to add to that, because I was going to talk about that one particular client where her young daughter ended up getting epilepsy, and thank goodness we already had the coverage in place, because otherwise, had we attempted to apply after having epilepsy, she would have had to wait till she was 18. And another reason why, again, if you have any grandchildren or children, you want to get them while they're young, because the application process is super tolerable. It's actually, super tolerable compared to an adult application. And you also not only hope that there's nothing that will make them uninsurable, but hey, let's just face it. There's a small segment of kids that go through their teenage years and their early adult years without being experimental. Okay. We all know this. And there's very few young individuals who try 0 drugs and 0 alcohol through that period of time and participate in 0 hazardous activities. Okay. And I will tell you that during that period of time when they're like teenagers or young adults, there's 3 or 4 cases that Lacy and I have come across where they are not insurable because of that experimental stage. Right?
And why? Because it's illegal.
Yeah. It's illegal, and it's a higher risk to the insurance company, to these individuals. But when you get them young, they are insured regardless of what they do throughout those years, right? And not only does it cost less, but it's just, then it's not even an issue to start. another really great benefit of, like, if we're just going along the lines of encouraging and empowering our parents and our grandparents here to say, hey, like, what is another potential reason why we would also want to get coverage on those young ones is because as soon as you put a policy in place on that child, you instantly start multi-generational wealth because it automatically impacts your next generation without them even being born yet. So do you want to maybe add to what I just said there?
I'll use my own example, like with my oldest son. So we have policies on all three of our kids, and infinite banking is a topic that's talked about almost daily in our home. And so our kids have heard us talk about your policy. You have this much money in your policy, whatever. So our oldest son, he's very money conscious and likes to be very responsible with his money. And so he started to begin exploring the option of like putting his own money that he had earned into a policy. He had a meeting with Winnie on his own for him to understand. And he actually did straight up ask, like, well, why do my parents have policy on me? That seems weird. Like, that's my policy. And so it took some explaining to him for him to understand that what we have started and created for him, our hope is that our children outlive us, right? And so at some point, the policy that we've started and created will be passed on to him. And then will be passed on to his family or his kids. So we've created that generational wealth piece. Now that's going to impact those generations, like for generations to come.
So if we don't know what you know over there listening on the other end. So I'll bring it back to a particular level. Every single insurance contract has 4 positions in a life insurance contract. There's someone who owns it. Then there's the physical body that's insured that the life insurance actually does the qualification on, right?
Mm-hmm.
And that position is called the insured. And it's only when the insured passes away, that's when the beneficiaries get paid out. And the beneficiaries are the people who receive the death benefit tax-free. And then there's actually the payer. And all 4 positions in the life insurance contract can be 4 different people, right? Mm-hmm. And so because kids aren't able to start a life insurance contract on their own, right? When Lacy started her contract, Lacy and Reed started their contracts on their children, the kids were underage, right? Yeah. And so they own the policies. They're the owner. They're the ones that are in control. They get to decide who the beneficiaries are. And they're the ones who also pay, right? And so at some point, like, let's say Lacy, she does own one of the contracts on the kids. And when she graduates to heaven, which you will, because you're awesome. And
at some point.
At some point when you do. So now let's go with your oldest, right? So you own that contract, but your oldest is the life insured.
Right.
Okay. And so what then happens is when you pass away, that contract, because your oldest is the one that the physical body that's insured isn't the one who passed away, you are. So now a new owner has to step into place, right?
That's right.
So if your oldest is not quite of age yet, then it's not likely that you've chosen your oldest to be the new owner of the contract. It's probably going to be Reed, right? But at some point, and I always sort of advise, do not hand your children the policy, right? Make them start their own, but don't give the one that you started on them to them before you've, at bare minimum, met their spouse and like their spouse, right? You don't even have to give your policy to them until you pass, right? And then when they do, they take over ownership. Now they are the owner. They are the physical person that are insured. And now they get to decide who the beneficiary is, right? Which is hopefully going to be the grandchildren you haven't met yet.
Also pay for it.
Yeah. But hopefully the beneficiary that they choose is going to be the grandchildren that you have not met yet, which is why we are able to say it impacts your next generation that you haven't met yet. So hopefully that brings more clarity.
Yeah. And I would say like it's a great conversation, because when we start this process and somebody comes to us and they want to explore infinite banking, it's so much more than just infinite banking. Like there's so many pieces to the puzzle that all fit together to create this grand plan, if you want to call it that, in our lives, in the banking portion of our lives, in the family dynamics around finances, in the generational wealth piece, the succession plan, and especially when we start to talk about farms and ranches. Because here's the thing, it's not always a parent to child transfer of the farm. Sometimes it's a transfer of a farm from a couple who don't even have kids.
Exactly.
So how does that impact? Like, what if the couple in our book, what if they didn't have kids? What's the impact of that transfer? Okay, so maybe they have an interested party in the ranch and they're going to try to transition that or the farm. What impact does that have, and what role does insurance play in it? Or what could it play? What could insurance solve in a transition where there's no children involved or not even any relatives coming? I mean, but really it doesn't matter. I mean,
so I would say, like, so some people could guess that right away. I'm just going to provide one of those answers, and that is to be able to honor what you would like to see happen after your death to what you worked so hard for. So if it was a piece of land and you want it preserved a certain way and you entrust who you're leaving it to, it may not be your relative, it may or anything like that, but you know that this person shares that same vision. Life insurance can help solve that, because then they're not going to be motivated by potential taxes that they have to pay to sell off that piece of property in order to keep it.
Yeah.
Or get into debt somewhere else in order to keep it, right?
Yes, because there is going to be, like, our silent business partner, as you call them, they are going to come.
They will. They want it. And, which, by the way, silent business partner, I am going to say this until I hope this becomes a movement. I do. I think that every municipal, provincial, and federal employee becomes insured. And the government, so Canada is actually a corporation. So I want the Canada Corporation to put life policies on all of these people so that when they pass, the death benefit goes back to those levels of government to make sure that every single level isn't, prevents being in debt or pays off the existing debt that has been created by past municipal, provincial, or federal governments. And I think that would be amazing to do, right? Tax-free death benefit to come back and pay off all the debt, because we are in such cahoots.
Big corporations have life insurance on their key employees.
Right. And Canada is a corporation.
Yeah.
And
I mean, we had a meeting last week with someone, and it was a key employee of actually an insurance company in the States. That's what it was. And that company has insurance on him.
Yeah.
Once you've earned a bad reputation, it's really hard to go back the other direction. And I feel like insurance in a broad term has earned a bad reputation, but we're here to advocate for it and to say, like, just open your mind and say, what can insurance do for me?
Yeah. How can it actually serve? Yeah. And sorry, I know we want to come to a close on this, and I just want to add one more piece to Empower, and another reason why you want to take that step to actually find out if you're insurable or not. At least find out, because just because you apply doesn't mean you have to move forward with anything, but at least you know whether you can or cannot. Right?
Yeah, that's a huge thing. Like, submitting an application does not tie you to anything. You have choices after, if you receive an approval, there are choices and options after that approval before anything's put in place. So I guess don't be afraid, because you don't know what you don't know. Don't be afraid. Take a leap.
Hey, Lacy, don't think of a snowstorm. No, don't think of a snowstorm, Lacy. Stop saying don't.
Don't.
But I'm just, okay, I think there's one more thing that it could potentially solve. Look, if you're a parent or grandparent, or you're someone who is wondering, how are my grandkids going to pay for a home? As soon as my kids are done graduating from university, they're going to move out. But that's not happening as much anymore.
No,
that's not happening, because the cost of entry to get into a home is quite high, right? And if you look over, we can do another episode of this, but just even see what's going on for London over there. They have 40, 50, 60-year amortization schedule on mortgages over there.
Yeah, it's crazy. I do think we have to get creative.
Mm-hmm. And that creativity can come through life insurance.
Yep. Yeah, we have to get creative and be open to doing things different, because let's face it, we are living in a different world than our parents lived in. And if we want to continue to thrive, we're going to have to start being creative and open-minded to different things.
Amen. I love that. I love that. I don't know if we can say any more than that. I think we said it. What can we do, Lacy? What's the next step?
So we have something really exciting coming down the pipes. Our audiobook is almost done. And so if you head over to our website, ranchyourway.com, that's where you can purchase the book. So it is coming in a bundle now. You're going to get the hard copy and the audiobook. So that's going to help out tons of listeners. If you're in the tractor, you're in the feed truck, or you're on the road, the audiobook is going to come in so handy for you. Head over, watch us on YouTube or Apple, Spotify, iHeartRadio. Thanks for listening.
So glad you leaned in with us on the Winnie podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.